Fundamental analysis of stock. A fundamental analysis of stocks can be found below. Understand the company before investing. You must understand the company in which you plan to invest. By doing so, you will get a better sense of how the business is performing, whether it is making the right decisions for its future, and whether it is worth holding or selling. A good way to gather such information is to visit its website and learn about its management, promoters, and products. Study the financial reports of the company. After you have a good understanding of the company, be sure to analyze its financials, including its balance sheet, profit loss statement, cash flow statement, and operating costs, revenue, and expenses. When the firm has a compounded annual growth rate (CAGR) and a net profit that has continued to grow over the last 5 years, it is considered a healthy sign. Check the debt. A company's debt is an important factor that can affect its performance. The performance of a security cannot be good, and the rewards can't be great if it has a lot of debt. The recommendation is to avoid companies with high debt levels. To invest in a company, make sure the debt equity ratio is less than 1. Find the company's competitors. Invest in a company that is among the very best in its industry. You should find a company whose performance is better than others. New projects, upcoming projects, and new plans should all be in place to improve the company's future prospects. Analyze the future prospects. Whenever you want to invest long term, you should use fundamental analysis. Consider investing in companies whose products will still be useful 15 to 25 years from now. Review all the aspects from time to time. Investing in a company and forgetting about it is a bad idea. Make sure you stay informed about the company in which you have invested. The company's financial performance and news should be kept up to date. It is best to sell the security if the company is experiencing problems.